and we wanted to invite you to these free resources. You can share them. Feel free to ask questions at the end, write them down, take copious notes, and we will see you then. For now, we have our Senior Vice President, Jeff Gilmore. Take it away, Jeff.
Hey, good morning, everybody. Happy Cinco de Mayo, and our first time coming at you via Zoom, and it's really excited. This is something that we have been working on for quite some time, and honestly, these are things that we are coming across. It's a tough market right now, you know. Can everybody hear me, by the way? Type it in the chat, baby. Just before we get rolling. All right, sweet. It's crazy, you know. And so I know you guys are feeling it on your end. We're feeling it on our end. You know, it's always fun when it's smooth sledding, but you know, I find it hard when you're trying to count your joys and trials. And so I wanted to start this real quick with something I love to read, and I've shared this before, and I wanted to share it again. But there's a book called The Noticer, and in it, he's talking to a guy that's homeless, and he's living on the beach, and he's depressed, and he's frustrated, and he's down, and he's just you know. We can get like that, right? That's just how life comes at us. But in the book, this guy Jones is speaking life to him, and he says to him, he says, "Think with me here. Everybody wants to be on a mountaintop, but if you remember, mountaintops are rocky and cold. There's no growth on the top of a mountain. Sure, the view's great, but what's a view for? A view just gives us a glimpse for our next destination, our next target. But to hit that target, we must come off the mountain, go through the valley, and begin to climb the next slope. But it's in the valley that we slog through the lush grass, the rich soil, learning and becoming what enables us to summit life's next peak." So my contention is that you're right where you're supposed to be. The old man scooped up a handful of sand and he let it pour through his fingers. It might look like barren sand to you, son, but nothing could be further from the truth. I say to you that as you lay your head down tonight, you are sleeping on fertile ground. Think, learn, pray, plan, dream, for soon you're going to become. And so the reason I wanted to start with that, and that was just near and dear on me, because here's the thing. We've all gotten to where we are, wherever you are on this road, by having daily disciplines and doing what you're doing. But to get to that next level, to go with the industry shifting from lending in on the real estate side, it's across the board. There's shifts that are happening, and we're going to have to pivot. We're going to have to make some changes to take our business to get to where we want to go, to take it to that next level. And so what we've done, we have literally spent months vetting. Fairway's a national company. They're all over the U.S. We have talked to lenders that are all over, from Texas to California to Colorado to Pennsylvania to Florida to you name it. And we've talked to real estate agents as well. And there's constant things. There's constant feedback that we're getting on, like, hey, man, gosh, we need to know these things. And so from a professional, for someone who tries to come at it every day and try and be the best version of myself for my clients and my referral partners, please, please, please do me a favor. You took an hour, and I am so grateful because I know how precious my time is. You chose to be here. Take some notes, because I promise you, these are 7 things. You know, the horse wins by the nose. The golfer wins by 1 stroke. It's that competitive edge. When you're going in and we're seriously competing with cash offers. We've got 30 offers in 48 hours. These are 7 things that we feel are going to help your clients get their offer more accepted, to put their best foot forward, to help give them that competitive edge. But also, as we're sitting here in this unique spot where you've got a lot of people that we're talking to weekly, where they're saying, man, I wouldn't mind selling. I'd love to get a bigger house. I'd love to maybe sell down, but I don't want to do anything right now because the inventory is just so great. Or pay all my equities in my home. So there's going to be some takeaways that we hope that we share with you guys, that when you're going out and you are talking to your database, which gosh knows now more than ever, dial into it. Please, please, please make sure that you are aware of these things and having the dialogue with your clients to share these things, because I'm telling you, it's going to open doors. It's going to open floodgates of great opportunities. So that's it. 7 things to help your clients' offers get accepted. First and foremost, is we just rolled this out last week. It is a guaranteed pre-approval. This really started in other parts of the country where it is cash buyer city. How do you compete with that? How do you compete with cash? So what we've come up with and what we just rolled out is a guaranteed pre-approval. On this guaranteed pre-approval, here's the way it works. Get us the clients. When you're talking to them day one, ask them, hey, who are you talking to? Because here's the deal. If they're like, yeah, I talked to an online lender, we're good. You know, I've got myself, a lot of my agents that I've talked to, they're like, hey, you know what, we're going to take it for whatever it is. Like, you know, if they tell me they're good, they're good. I'm not trying to rock the boat. We're just trying to go. Well, here's the thing. Have some dialogue and point blank tell them like, hey, cool. I would encourage you, because of the competitive market that we're in, please talk to, you know, I've got a guy or got a gal. We've got a great team at Fairway that they offer a guaranteed pre-approval. Here's what's up. It takes about 4 to 5 business days for us to execute. We're going to talk to the client. We're going to run credit. We're going to get their income and asset documentation. We're going to order a 4506D. We are going to fully underwrite that loan on the front quick. From there, we're going to issue a pre-approval, but we're going to also issue this guarantee. So what does the guarantee offer? The guarantee offers the client, if this loan does not close for something other than a title or appraisal issue, because nobody has any control over that, we're going to back the client $7,500. $5,000 in earnest and due diligence, and up to $2,500 in inspection reimbursement and relocation expenses. This is ginormous. Again, if I'm thinking if I put my realtor hat on and I'm like, hey, I really want to put my client's best foot forward, I really would, you know, again, you've heard that saying, you know, don't show up with a knife to a gunfight, right? It's like, dude, I want my clients pre-approved guaranteed. I want to throw a guarantee on the table to my seller's agent every time, 10 out of 10. Will it help get every client? I don't know. But I sure still, I would much rather have a guarantee and be able to explain that to the seller's agent that, hey, this thing's closing. Check this out. Let me show you what we have here. So in addition to the pre-approval guarantee, so this is one. So I definitely want to make sure that when you guys are out talking to clients, please share this with them. We would be honored to serve your clients from this standpoint. But the second thing that we're doing is how are you presenting your offer, right? So when you're going and you're calling the seller's agents and you're saying, hey, I got an offer coming your way, we're faxing it over now, we're emailing it over to you, you know, let us know highest and best, let's go. You know, what most banks are doing right now is they'll send you a pre-approval, right? You talk to Quick and you talk to these people, they're going to send you a pre-approval, saying that your buyer's pre-approved to buy that house, you're submitting your offer, and at this point, really, you're just going highest and best, you know, and just hoping for the best and throwing the kitchen sink as far as options and guarantees and overages. But what we're doing now is this. When we submit a pre-approval, we're going to submit a guaranteed pre-approval. You know, and if you've got somebody that comes in on a Saturday and it's like, or Sunday, they're like, hey, we just connected with this buyer, they're trying to make an offer today, we can still issue a pre-approval, we're just not going to issue a guarantee, right? But still, if we have enough time, if you can get those clients to us day one, we can crank these out quick for you, right? But the one thing we're going to do, if we review income and asset documentation, we're going to also, for our standpoint, from the lenders, from our loan officers, are going to call the seller's agent. We're going to come alongside you and come alongside the client as best we can, and we're going to be calling them. So the first thing's a phone call. Phone call is, hey, you know, Alice, I just wanted to give you a heads up, Jeff Gilmore, Fairway, you're going to be getting an offer from Brandon. Just a quick heads up on William the buyer. We have underwritten everything on this. This thing is locked down, fully approved. We're going to be able to close this. Heck, we could close it in 3 weeks if needed, close it sooner if need be. But this deal will close. All things being equal, please relay this to your seller, because if all things being equal, they need to know that this one's in the bag. And then we'll hang up the phone. If we talk to them, that's the conversation. It's the dialogue we're going to have. We're going to follow it up with a text message. But in the text message, what I've started to do is I've created a video that I'm just literally cranking out right out. So I'm cranking them out, sending them directly to the seller's agent. And what we're hearing is, here's an example of what that looks like. Hey, what's up there? Okay. That's all right. Yeah. Yeah, sorry guys, my apologies. This is our first pass, so forgive me. This is tech problems, but nonetheless, the video just exactly explains what I just told them. But I'm seeing doing it face to face, and what I'm hearing, some of the feedback that I'm getting on the offers that are getting accepted, is I'm having agents, the sellers agents, guess what they're doing? They're hearing my voicemail. They open their phone, they've got a text with that same voicemail. It's me, it's my face. I am explaining, detailed out how clean that buyer is and that we will close, we will meet them at closing. There's going to be multiple offers. Please, please pass this along directly to the sellers. Guess what they're doing? They're like, hey, that's pretty cool. I mean, I've had tons of sellers agents reach out to me. They're like, hey, man, that was really cool. Really appreciate you doing that. I don't have anybody doing that. That was really neat. They're taking that text message, they're forwarding it to the seller. Now, here's the cool thing. Because it's like, you talk about like a uniqueness of I've always done like, I've had agents that I've worked with that really utilize the love letter. Well, now you can't do that. It's like now the agents are like highest and best, can't discriminate, this, that, and the other, no more love letters. Here's our love letter, right? We'll do the love letter for you, and we're going to send it to the seller's agent who is going to pass it along to the seller. Again, just that one nudge, that one competitive edge that's going to get you over the hump to get that offer accepted. So please know this, because why would you want to go any other way, right? So that's the second thing. Now, so I've got Bruce here that's going to be talking to us next, because here's the other thing too that we see is a lot of our clients that we're talking to right now, they own a house, they got to sell a house to buy the new house. So they got to, and like, because, or they're like, dude, I really don't have, I don't have the money. I don't have the money right now. All the money's in the equity in my home for when I sell it. So I got Bruce to cover some amazing strategies to consider and to be able to counsel your clients on what to do.
All right. Thanks, Jeff. Awesome job. Welcome, everybody. Appreciate your time. So as we all know, best offer, everything being equal, is cash. So we've got some options we'll talk about later, how you can actually make a cash offer with your buyer using a third-party company. After cash, the next is going to be conventional. For good or bad, conventional is looked at better than FHA or VA. And then non-contingent. In other words, if they have a home, you cannot submit an offer these days with a contingency to sell that home. So a buyer will call us, and this goes back, Jeff talked about get the buyer to us as early as possible. That is so important in this environment. We have to work as a team, us, you as the realtors, and the buyers. And the buyers, we do this every day, so we know the market's crazy. Most buyers know it's competitive. They don't know how crazy it is until they get into it. So we have to work as a team. So the earlier we can get that buyer and talk to them and prepare them to make the best offer, which often is non-contingent before their home sells, the better we can do. We can also do some credit counseling and different things like that. So get them to us as early as possible. Brandon, you talk to somebody in the grocery store, they said, I'm going to buy next summer. Say, call Bruce today so we can get you in the best position possible. So they call, they say, yeah, I want to buy a home. I've got $80,000 equity in my house. Brandon came over and told me what he could list it for. So, that's perfect, right? Well, no, it's not, because you can't get that $80,000 till you sell your house. That's usually how a market works. So how do we tap into that equity, or what are some other options? The first thing is to make sure they can qualify carrying both mortgage payments. If they can't, we've got a strategy using the home equity line where we can maybe get them in position to. If they can, then they say, well, I don't have any, say I've got $8,000 in the bank in my stimulus check. I want to buy a $300,000 house. I need to put a minimum of 5% down. How do I come up with that money? The first thing would be savings. So obviously people say, I don't have any money. Sometimes you tap into it. Maybe they've got a, cash policy, life insurance or something. So maybe there's more there than they think. If they don't have that, something I've done when I bought the current house I'm in, I hadn't sold my previous home. This was in a little bit different market where homes weren't selling as quick. So I did a loan against my 401k. So I was able to pull out money, put the down payment on the new house, do a loan to myself for my 401k. After I sold that house, I was able to pay that 401k loan back. We don't have to hit them with a payment on the 401k. They're paying themselves back. The only penalty, I guess, is the money's out of the market for that period of time. But that's a great way to do it. A lot of people don't realize it. Usually you can borrow, it's up to 50% of the vested balance, up to $50,000. So there's a lot of potential there to pull money. An IRA, a lot of people, that are under retirement age, say, I don't want to tap into an IRA I have because I'll get penalized and I have to pay taxes. That is true, but most IRAs, and with any of this, obviously consult your financial advisor, but usually with an IRA, if you pull the money out, if you pay it back within 60 days, you don't have to pay the taxes or the penalties on it. So pull it out, use that money to close on the new house, then you sell your house, you can pay that IRA distribution back. Margin loans. Some people have brokerage accounts, stock account. They say, I don't want to sell stocks. The market's too hot right now. I don't want to take capital gains. So you don't have to. You can do a margin loan against the value of that brokerage account. Another creative strategy. Gift from relatives. This is one I like the most. Well, I like them all. But this one is the one that a lot of times you mention it to somebody and they say, my parents don't have money or they're not going to give me money. Do it for the kids. So what I tell them is, you have young children? Yes. Tell them that you want to buy this new house because there's a perfect bedroom for Susie and we need this money. We can give it back to you, and how that works is we do document it as a gift. So if I needed $15,000, get my parents to gift me that money for the down payment on the new house. And then once I sell the house, I can just gift it right back to them. A lot of people worry about gift taxing, and we talk about that as well. There's a lifetime cap of a gift tax. I think it's literally like $4 million or higher than that. So usually there's not a tax implication, but again, they can gift it back after closing. Again, talk to your accountant on those things as well. The best strategy is a home equity line of credit. So if we can get to them early enough, most people, if they have equity, and let's go to the next slide so we can look at this example. So we've got an example here of somebody that owns a home. It's worth $325,000. The balance on their first mortgage is $200,000. So they have $125,000. So that's when they say, yeah, I've got all this equity in my home. And after I sell it, I'll walk with 108 or whatever. But how do I tap into it? If we can get to them early enough, we have bank partners that will usually go to 85 or 90% of that value. So let's say they go to 85%. That means they could pull out basically about $75,000. So how that works, an equity line is simply a line of credit. So they open it up. It's very inexpensive, usually only a couple of $100s. Sometimes banks run promotions where they cover those expenses for you. So now they've got this line of credit. It's secured money. That's super important because you can't use an unsecured line of credit for a down payment. It's secured money, secured by their home. So they can tap into that at any time they need to. So if they have $75,000, they want to buy a $300,000 house, they could pull the full 20% down if that's what they wanted to do, and put that down payment down. Or maybe it's just enough to get 5%. The payment on that equity line is very minimal. They're usually interest only. So on the 75, if they pulled all the 75,000, their payment at a rate of 4.5%. And the rates are variable, but you're only going to have a short time anyway, so it really is a moot point. But let's say at 4.5%, that's $281 to borrow $75,000. In our example here, another thing we can do to deal structure, so let's say they don't quite qualify carrying both homes because they've got, in this case, a car loan, a couple of credit cards that total $425 in monthly payments, a student loan that's $180. So they've got, in addition to their mortgage, they've got $1,055 worth of total debt. We could pay all of that off, and that's $31,000. And if you look on the example there, $31,000 at 4.5% means $116 payment. So we just took them from $1,055 worth of monthly obligations that they've already told us they want to pay off anyway when they sell the house. We're just doing that early. So we're taking that $1,055, narrowing that down to $116 a month. So that opens up for us about $1,000 worth of affordability to qualify for the new home. That's huge. So again, the line of credit, they just make an interest-only payment. Once they sell the home, they're going to pay off the line of credit. They're going to obviously pay off their first mortgage. And then they're stuck with this big chunk of cash. Let's say they only put 5% down on the new house. And they say, well, what do I do with this money now? The great William Roseberry is going to come up and talk to us about what you do with that lump of cash once you're in the new house and have now sold the old house.
Good job, Bruce. Thank you. Hey, good morning, everybody.
Morning.
One of the things I want to talk about, the next option is doing a recast after somebody was to purchase a home. So in essence, somebody can take the funds that Bruce was just talking about, buy a home and put as little as 5% down. A recast, how a recast actually works is somebody at any given point can take proceeds from a lump sum of money, whether it's proceeds from the sale of your house, if somebody got an inheritance, you can actually pay down the principal balance and ask the lender to recast the mortgage. So what the lender does is it resets your mortgage payment based upon the new principal balance. The original terms still stay the same. You're still doing a 30-year fixed, 15-year fixed, still, same fixed interest rate. Go to the next slide for me, Jordan. To give you a scenario, let's say, for example, what Bruce had talked about, somebody takes 5% down from their savings and goes ahead and purchases a home. They're writing a non-contingent offer, so it's not contingent upon the, that's okay. So it's not contingent upon the sale of their house. They're able to stay in their house. Go back. All right, skip ahead a couple of slides here.
So your internet was unstable.
Yeah.
Come on in. Good morning.
The internet is unstable.
The internet is unstable. Sorry, slight internet connection problems. Well, we'll get it back up in a minute, but thank you. So in essence, let's say, for example, somebody, wants to go ahead and write the offer, not contingent upon the sale of their house. They can take 5% down from their savings account, 401k, HELOC, just like Bruce had talked about, and go ahead and purchase the home. After they moved into the home, they sell their existing home. They can take the proceeds from the sale of their house. So let's say, for example, they're going to net proceed about $100,000 from the sale of their house. They can take those proceeds, there you go.
There we go.
They can do a mortgage recast.
Thank you.
So that their so they're 5% down, their mortgage payment would be about $2,000 a month. That includes PMI, of course, if you're just putting 5% down. When they sell their house, they take the proceeds, $100,000 or whatever it is from the sale of their house, apply it to principal, and ask for a recast, and the lender will recast their mortgage payment based upon the new lower loan amount. So their payment ends up being $1,588 a month. So it's as if they sold their house, net $100,000, buy the new house, you still got the same mortgage payment. But in this case, the offer is not contingent upon the sale of their house. And this is what works well for somebody that's, can qualify with both mortgage payments, or like Bruce talked about, paying off some debt if you need to with your home equity line of credit to purchase. As far as doing a mortgage recast, is this me doing this? Or are you skipping to the next one? There we go. Mm-hmm. It is only eligible for conventional loans. So unfortunately, FHA, VA, USDA, you won't be able to do any kind of recast. Typically, the investors want you to put down or pay down at least $10,000 or 10%. The cost is usually a couple $100. It's very minimal cost. There's one piece of paper that you submit, you sign, they tell you where to wire the funds. The whole process, depending upon the servicing company, can take anywhere between a month to 3 months, maybe 4 months. So during that time period, the borrower is still paying your $2,000 a month, but in the end, they get the $1,500 lower payment. Now, the next thing we want to talk about is, let's say, for example, a seller is not comfortable with going ahead and purchasing a home first. We're going to introduce Brian up here, and he's going to talk about some options on how to help the seller move forward.
Thank you, William, and thank you, everybody, for being here in person and virtually. So what I want to talk to you about, and what this is all about, is most of the time lenders, we're looked at as order takers, and we just sell debt. And most of the time that's the case. We want to set ourselves apart by helping you bring a strategic approach to the problems that your clients have. And in this market right now, we all know the problem is that it's hard to buy a house because there's 2 houses for sale and 100 people are trying to buy it. So, and when you sell a house, you're making tons of money. So as you guys, as agents, are going out and you're talking to your database and talking to people who may be prospective sellers, what's the number one hang up that they come back with? What am I going to do when I get to turn around and buy a house? How am I going to buy a house? It's not, So you're in a position where you literally can't afford to make $1 million selling your house because you'll be homeless on the back end of it. You got to turn around and be a for a mill house that's listed at $200,000. I mean, that's not even an amateur move. You're not even playing the game at that point. Never to praise. You're not going to have the cash to bring the difference unless you're Brandon King. The rest of us normal folks are going to have to figure out a more strategic solution here. So what we decided to do is take the hypothetical out of discussion. We began to run case studies with some of our agents and some on the listing side when they're entertaining multiple offers and how they're breaking those down and how they're making those decisions and what kinds of things go into them, which will help us determine our approach and your approach for how to go in and put your best foot forward to these buyers. So what we did our case study here. This particular one, this house was listed at $225, and according to the agent, that was a stretch based on comps. So they thought they were shooting for the moon, but why not? Let's put it at $225. So they had 31 sight unseen offers, which I'm sure you guys are, a year ago you would gasped, and now you're like, yep, me too. Tell me something new. So what they did, they organized them based on the following criteria. Purchase price, obviously, due diligence deposit, earnest money deposit, due diligence date, closing date, personal property conveyed, loan program, seller paid closing costs, home warranty, and other, including things like leaseback agreements and not ask for repairs, what have you. And the highest offer in this case was $255,000, but the winning offer was $240,000. That was the one that accepted. And the 255 had an appraisal contingency where they'd make up some gap. The 240 did too, but they were able to offer a lease back to the seller. Okay. And what we found, we started seeing this in our case studies, that lease backs were more and more appealing to people because when you sell a house, typically you have to go buy a house. And to go turn around and be a buyer in that market, it's not very realistic to have 21 days to go find a house, win the deal, get under contract, and close while your house is closing in 21 days. All right. It's also not very realistic to go out there and make a contingent offer. Even though you and I know that every offer is contingent, even cash offers are contingent on the whims of a rich madman, deciding they're going to do something else with their money. Every offer is contingent. But if you go out as a seller and then you're having to go be in the same market and make a contingent offer, it's very, very difficult. A leaseback option gives your seller the possibility to stay, have their house sold, have the equity from their home, not have to worry about making a contingent offer, and they can go around and turn around without being homeless and have some breathing room on time to be in a realistic situation and make a non-contingent offer, which will improve their position as well. So, our biggest inventory right now, again, our biggest problem in the market right now is inventory and opening up inventory. So unless somebody's getting divorced or they're being relocated for work, it's really hard to have that discussion with, hey, I can make you a lot of money. Let me make you a lot of money as a great list agent here. This is the back end of that discussion on how you can help them and ease their tension about turning around being in that market. Again, when you're doing that, you're making your sellers offer non-contingent, which is going to make you much stronger on the back end. And that's something that you can present to that list agent. Okay. So what we do is we talk to our prospective sellers out there in our database who are scared to buy, and we let them know that you have some breathing room, and you can take these into your listing appointments with people who think, man, yes, I would. Or when you have your buyers in your door knocking neighborhoods and, hey, I have a buyer who would love to buy this house if you're willing to sell it. And they say, well, I'd love to, but where will I go? How will I work that out? I don't have 21 days to find a home. That gives you some ammunition and an arrow in your quiver that you can talk to them about that stuff. And you're taking a little bit of that pressure away. So as lenders, what are we doing is when we're having what we call our discovery call, when we're having that first phone call with a buyer, hey, what do you do for a living? What are you looking for? That kind of stuff, that first phone call. I'm now adding this to my script. I'm saying, what are you willing to do to get a house? Are you willing to consider appraisal contingencies? Are you willing to consider leaseback options? Are you willing to do all these things? so that when we turn around and make that phone call that Jeff talked to you about earlier to the seller's agent and say, hey, Bobby, seller's agent, you're getting an offer from Johnny Client, who's mine, and they're solid and this and that. Hey, by the way, what's important to yourself? Is it being able to have some room to breathe? Is it being able to close quickly? Is it being able to do this or that? And then I've already got that information on my buyer, so I can say, hey, great news. I talked to my buyer already about this. I don't have to call them and make sure they're okay with it. They would be fine executing the lease back or something if that can help set their offer apart. So it's more than just calling the seller's agent and say, hey, I really want this loan to close so I can get paid too, so please accept this offer. I'm telling them, hey, not only have I verified and done this work, but I also have other alternative plans that can help you meet your goals, whatever your individual particular goals are. So yeah, again, we're going to share that in the call to the list agent. We encourage you to put us in touch with them so that we can do these things. And we will also share that information with you after our discovery call so that you know, hey, we've had this talk with the partner, we've talked to them about how this works financially from a mortgage standpoint so that they've heard this conversation from more than one professional in the transaction. So the next problem we come up to is, what if you're not Brandon King and you're not rich and the house doesn't appraise and you can't bring $50,000? Brandon King is obviously rich because he can just walk around with one of these in his pocket. You got to be rich for something like that. Ready to save the day. So what if the house doesn't appraise for, if it's $50,000 light, and all of a sudden the buyer's like, oh my gosh, I have to bring $50,000 on top of the $100,000 I was putting down to be able to buy this house. Help me find a solution. The easy solution is come up with the money, but we have some alternative solutions for that Justin will go with.
All right, thanks, Brian. And just to kind of touch on this, because we just covered a bunch of stuff really quick. I'm telling you right now, like personally, this is like, I'm running CMAs. I'm calling every one of my past clients. I'm like, hey, how's everything going? If we were to sell your house, this is about what we could net. What do you owe? Wow, like, hey, if you're interested, I just got out of a presentation. There's some amazing options. You probably need to just talk to, let me put you in touch with this guy and have a 5-minute conversation, 10-minute conversation to explain this stuff to you. This is what we do. This is how we roll. So, and it would be an honor to serve them. So this has happened to me. I've got several right now. So we have this a ton. So what's going on right now is you've got clients that are making offers and there's bidding wars where these homes, it's just causing immense pressure where the houses are literally, they're getting bid up so far, it's creating appraisal pressure, where houses aren't appraising for what you're going under contract for. And if the client sees it, they want it. A lot of clients are coming in and they're saying, hey man, I've got 10, I've got 20, I've got more, I've got a big chunk of money to throw down. Let's go. And so when this stuff happens, a lot of times when you're talking to lenders, right? Lenders are talking to the consumer, like the clients, like it's an emotional thing. They see it, they want it, they're in love with it. They've already put the furniture in it. They're like, hey, we're gonna put the Christmas tree here. And then the appraisal comes in like, and then they're like, oh my gosh, now I've got to cover that and this, like done. Okay, I'm not doing it, And so, but here's the thing, because it is in this point, and this is what I see and what I feel, because even when I bought my house, I'm like, hey, you know what? This is more than, there's an investment side to it. And I'm not saying they'd be reckless, but it's like, hey, you know what? I've got 3 kids and this is the house I'm going to raise them in. This is the chapter of my life I'm choosing to spend it in, this house. And I'm going to raise my children and go through college before we, hopefully, before we ever sell again. This is it, right? And so if you see the house and you're like, hey, I love it, and we're running comps and you see the appreciation, these are options that are legit happening, right? So client comes in, they come to me, they're like, hey, we're buying 500 under contract. Yes, we won. We're going to put 20% down, Jeff. So we locked them in. 500, 20% down is 100 grand, financing 400, 299. All your costs, your all-in payments, 2189. That cash to close is 109,572. We're in the bank. Let's go. Let's roll. Appraisal comes back. 480, 20 grand light instantly. Now here's the thing: if you're letting your clients go with just an unexperienced, loan officer with whoever, it doesn't matter who it is, who hasn't been in the game long enough and they don't really understand these numbers, it is crazy. What they're going to do is they're going to tell the client, hey, you know what? Sorry, you're going to have to talk to the seller. You're going to have to try to lean into your agent. You're going to have to work some magic. Otherwise, you're going to have to bring an extra 20 grand for the delta. And the client's looking at it and they're like, doggone it, there's my furniture, there's all the stuff that I had. I wanted to have a little bit of a cushion. Man, I am, and now it's super high emotion, right? So what we did with this particular client, we're like, hey, check it out. We're going to leave your loan at $400,000. Okay? We're going to leave your rate at 299. So instead of doing 80%, now we're going to be at like 83% based on a 480 value. Okay? So if you want to, I can geek out on this stuff, share some additional stuff that'll break these numbers down so you can share with clients. But check it out. 299, $400,000 loan amount, 2189 payment. Well, that payment's the same, right? The cash that we're going to utilize something called single premium PMI. Not all banks have it. You know, I've got a gal that started to work with us, joined our family from another local retail bank. They don't even have this option. She's like, what is that? I'm like, oh my God, are you kidding me? All right, so check it out. So in this particular client situation, their cash at close went from 109 to 110, $1,200. So they're like, wait a second, 20 grand delta. The other lender is telling me I got to bring an extra 120,000. You're telling me I got to bring an extra $1,200 to closing, and my payment stays the same? Okay, I can know that. Man, this is great. Thank you so much. Thank you for this is it. Like let's keep going. Train's on the track. We're rolling. Now this has happened too, and I've had to do it more extreme than this. So client 500, 20% down. Let's roll. Let's go. House appraises for 450. 50 grand delta. And here's the thing, appraisers, and this is not a Fairway thing, this is across the country thing. Appraisers have a very challenging thing. But you've got some appraisers that are like right there in the middle. Some will do time adjustments, they'll get aggressive, some will go conservative. So you just don't know what you're going to get. We've picked our appraisers that are on our panel up. I feel like they do a great job. But these things come in light like this because you're bidding up so much over. So in this case, the house appraises at 450. Check it out. We leave the loan amount at 400. Now we're doing a 90% loan off of 450, right? So I can show you the numbers. Still leave the loan amount at 400. Look at the payment there, 2189, dead on, exactly what they had originally expected. We're going to utilize single premium PMI. We're going to pay that single premium. It's done. Payment now, the cash is closed goes to 112. We're 2440. So $50,000 delta, and their cash is closed it increases by $2,400. They're like, holy cow! How did you do that? That is insane. Thank God, because here's the thing. I love this house, and I feel very confident that the value is there. It's very close, and we're moving forward. You know, I've got one right now in the mountains. It's 500, and she's got long range view, short range view. Very challenging thing. They were putting 25% down, and the house appraised for 412, $88,000 delta. We switched this thing up, and they're $4,000 more to closing. They're gonna sell their house, and they're gonna do a recast anyway. They did the monthly MI, and they're like, oh my God, the train's on the track. We feel very confident the value's there. I just totally disagree with the value. You know, it's a mountain property, and it's such a subjective opinion of value right there. But my point is, if you're not working with a very experienced loan originator that doesn't know how to explain this and completely diffuse the tension real quick, you're missing the boat. You're going to lose a lot of clients to where they probably, had they known these strategies existed, they would have been like, let's roll, man. I'm completely fine with moving forward now. So this will save deals. So definitely, I don't expect you to go, hey, you don't even know about single premium PMI, but just let us counsel. Because this now more than ever, I feel like you have to come in with a very experienced realtor and that's a great reputation, that knows the market, that can guide clients and counsel them. And you need to have a very experienced loan originator that knows exactly how to break this stuff down, and they can keep the train on the tracks, right? So super important. So this is fantastic strategy. Now, we have a lot of clients that don't have to. Like this is just, you know, this is really, you know, for non-first time home buyers, you really need to have 10% or more to be able to like even consider these strategies. And if you don't, so we have a lot of clients, and guess what? They have some credit challenges. They've had some things. They've had life happen, right? Bad things happen to good people. And so they've had, you know, they have to go FHA. They have to go VA. You know, that's the best loan option. So one of the best benefits for veterans is a VA loan. But boy, I tell you what, you know, they're having a hard time getting an offer accepted. USDA, I had clients that literally just put 5 or 6 offers trying to go USDA, looking out in Rock Hill, and they're just like, I'm done. So they ended up going conventional. I wish I had known about what we're going to talk about next. This, if you're not familiar with it, we're going to be doing a class next week to go deep on this. But we have Terry via Zoom that we're going to pop in here, and he is going to talk about ribbon. And most people have heard of ribbon, but they just came out with some enhancements to this that we all need to be aware of. So I'm going to pass that if we can get it over to Terry.
Hey, Jeff, thanks. Can you guys hear me okay?
You know, here.
I'm going to screen share with you guys here for a second. So as Jeff mentioned, I've used ribbon a lot. I think one of the overriding themes of today has been we all kind of think outside the box with the market the way it is. It's hard to get contracts right now. Every strategy you've seen today is probably thinking outside of the box in some capacity. Ribbon is one of the ways that I think outside of the box. And I've had the good fortune of using ribbon, understanding and knowing about their program for about 2 years now. I did my first ribbon deal in March of 19. Since then, I've probably done 40 ribbon deals. To give you an idea of how frequently I look at ribbon for solutions, it's Wednesday morning. We're not at 10 a.m. yet. I've had 4 situations already this week where ribbon has been involved with a deal for me. Monday, I got a contract from a buyer relocating from Florida and had to use ribbon to purchase his house here. We're selling the house in Florida. We'll do the repurchase here with ribbon once he sells that house. I have a veteran who has made 5 offers on houses in the last 2 weeks and gotten shot down every time, and talked to me yesterday. How do I use ribbon? I'm struggling to get a contract. What do I need to do? Same situation with an FHA buyer. And the last one, you guys, is agents will kind of cringe at. I have another buyer that I pre-qualified. She's a $325,000 buyer and has a house to sell. She talked to me on Monday, and she's like, I've already got Open Door coming to look at the house to see what they'll offer me on the house. I said, you don't want to do that. Let's look at ribbon. We can connect you with an agent. An agent can give you a market analysis on the property, let you know what you're going to sell it for. Ribbon purchase the house for you initially. So everybody at this point has probably heard of ribbon. If you're in the market, if you haven't, I'm going to kind of give you a quick overview of what it is. Can you guys see the screen okay? So basically, ribbon's an iBuyer, and the way that they operate, they're not like Open Door Knock. They're not going to purchase the house that you are selling. Ribbon purchases the house that you want to buy. And when they do that, you're able to go on, complete the purchase, you move in, you rent the property from them until you're able to complete the repurchase from them. Can be a number of situations, and why are we using ribbon? I look at them, like I said, on a good many deals. If you look at the bottom of the screen, ribbon works for all buyer types. This is basically the two. Can't see the screen. Can you guys see the screen okay? Good. So basically the 2 situations where I look at ribbon is the ribbon boost and the ribbon reserve. The boost program, the way that works is we, as a lender, I know that I'm going to go in and complete the purchase before ribbon buys the house for me. On all contracts with ribbon, you're going to have 2%. Ribbon collects a fee of 2% if we're using them in the deal. With the boost program, the fee ends up only being 1% if the lender is able to close the deal before ribbon has to purchase the house. So it helps save the client some money. So they call that the boost program. The reserve is a situation where we know going in, ribbon is going to purchase the house completely, and then I'm going to repurchase it later. The reserve is the 2%. So ribbon's going to collect the full fee of 2%. Agents ask me all the time, how hard is it to get ribbon involved? It's very simple. You get your lender to get your borrower pre-qualified. We're giving ribbon the pre-qualification letter. It sets their buying power. Ribbon's actually coming back and asking us questions. Have you reviewed credit? Have you reviewed assets? Have you reviewed income? Yes, yes, yes. So they'll have the buying power. As an agent, you'll have access to their website. You'll be assigned an account executive, and that's a person that you'll be able to get in touch with pretty much whenever you need them. I've used Ribbon for 2 years. I have never sent a text message that wasn't replied to within about 15 minutes. And when you're making, offers and deals on nights and weekends, that's good to know that they're there to help you because they want you to help you get the deal. So with both of those programs, I kind of set the stage to my client going in. This is something that we're talking about going in, especially for my USDA, my VA, my FHA buyers. My favorite 2 Ribbon deals right now are USDA and VA. There's no flip rule on either of those deals. So Ribbon can complete the purchase. And you can see here, let me get to the slide. Ribbon can actually go in and complete a deal. If you do the reserve, they can complete the purchase in 14 business days. So for you as agents making an offer on a house, if you can go in with a cash offer that's not contingent and it's a 14-day business close, that gives you a pretty strong offer. So my USDA and my VA buyers are going in with those types of offers. We're closing in 14 business days. And then as soon as Ribbon completes the purchase, we're going in to start the repurchase process. So we're about 45 to 60 days to have my buyer fully own the house. And we had the strongest offer with a 14 business day cash close. So when I'm repurchasing from Ribbon, in those situations, I'm able to use either down payment assistance or I'm able to increase the rate to give a lender credit where the buyer doesn't have to worry about a lot of closing costs coming out on the back end. So if it's a buyer that going in has the 2%, then you can make that offer with Ribbon using the buyer's 2% of funds. We're not getting seller pays for the most part right now, but if the buyer has that 2% to use Ribbon, you can go in with the 14-day close. And then on the backside, we can get either assistance or we can get a lender credit to help cover the closing costs for them so they don't have any money due at closing on the repurchase. That makes it the strongest offer that I know of. Basically, my team right now, we're closing 20 to 30 loans a month. We're about 85% purchase business. We're not doing a lot of refinances. The way that we're securing a lot of these contracts is using Ribbon with this offer this way. I do probably 40% of my business is government business, so USDA, VA, and FHA, and we would not be getting those contracts if we weren't using Ribbon in that capacity. I know Jeff said, I think next week that we're going to have a full presentation with Ribbon. One of the Ribbon execs will be on the call with us and can go over all the details of the program with you. But like I said, it's a great program, and it's just another strategy, a tool in your tool belt to help you gather and get new contracts.
Thank you, Terry, and thank you to our presenters, Jeff, Bruce, William, Brian, and Terry, and to our live studio and our Zoom viewers. We will take a few questions now on the chat. If you'd like to type in some of your questions, I can ask away, ask our experts here.
So we did have a question from Virginia Alter. I believe this was on a leaseback. She said, how did you do an offer accepted with no due diligence? On that example, for the due diligence, there was a 0.
Yeah, to be honest with you, I don't know how they did that. That's just the data template that the agent sent us. So, I mean, I would imagine they probably put a due diligence spot down. You probably combine the earnest money and due diligence in the box.
Or that may have been no due diligence period. There
was a no due diligence period. One of the boxes too was due diligence period, and one was due diligence deposit. So, but again, that would be just the data that the agent sent us, and we picked 1 out of 10 case studies that we did here for this one. So, good question. That would be great if we could figure that out. If we could do that. If you do, let us know.
Hey, Hey, Brian, Jeff, I'm going to jump on real quick. There's a couple of questions regarding ribbon.
Okay.
So Jenna asked if, just to be clear, buyer can use ribbon without having to sell another home. Yes, you can absolutely use ribbon in any situation. With,
Yeah.
can you guys hear me okay?
We can hear you. Yes.
I sure can.
Yeah, with ribbon, you do not have to have another house to sell. And I do use that situation a lot. Because of the 14-day close, you can go in with a much stronger offer. You know, I even look at it on some conventional loan deals. You know, the conventional, if you can strengthen it with a 14-day close, that helps. One of the situations that I forgot to mention with ribbon is they actually have come up with an appraisal protection program. So appraisal protection works is, let's say you have at 190. Ribbon will do a valuation on the house. So when you set your buyer up with ribbon, ribbon will do the valuation on the house, and they'll give you a solid number that they're going to use to purchase the house with. Let's say that number is $200,000. And then you have a contract for $200,000. So then you go and the lender orders the appraisal, and the appraisal comes in at 190. Ribbon will back the 200 that they gave the valuation at, and they're going to cut a check back to the seller for the $10,000 difference. So we're able to continue with the process, complete the loan. The seller's not losing the money. Ribbon's going to back that $10,000 difference, and the loan's going to close, and it gives protection to your buyer as well. In the situation, if we were doing a ribbon purchase, if ribbon were going to purchase the house for us initially, in that situation, if the same deal, if we buy it at 200 and the appraisal comes in after the fact at 190, Ribbon's going to lower the sale price of the house to the 190. So it's really a no-brainer on either end. It gives your seller and your buyer the knowledge and the benefit of knowing what that value is going to be. One of the deals that I had recently was brand new construction. It was listed at 199. Ribbon did a valuation of 219, and the borrower went under contract at 219. We're in the process of repurchasing that house right now. We're in the appraisal stage. So if the appraisal comes in low, Ribbon will drop the price of the house. For the builder that sold that house, it was a no-brainer. There was not going to be an appraisal, so there was no worry about whether an appraisal would come in $20,000 over list price. So it made it kind of a no-brainer deal for that one. As far as the DD fee with Ribbon, although it's negotiable, the seller can pay some of the costs. What Ribbon wants on the contract is they want 2% on the contract between the earnest money, the due diligence, and the seller pays, but all of that is negotiable.
Thank you, Terry. We also have a question from
Brandon had one. And hey, just a reminder, everybody, we're going to be doing a Ribbon specific presentation next week where you can spend an hour deep diving into the hood and take the engine apart and look at the nuts and bolts. We'll definitely have that opportunity. We encourage you guys to come back for it. Brandon, you had a question.
Question on the lease back. I'm doing that with listings right now. And you had a 59-day piece there. Is that something that you guys are doing?
Yeah.
Or is this something being drawn up by an attorney?
Yeah.
Because the typical, seller possession after closing is like 14 days or something similar to that. So go a little deeper into that.
Yeah. So to repeat the question, yes, everyone, I'll repeat the question. Anyone else? So Brandon asked, with the lease back, what's the story on the 59-day period? Who executes that? Who puts paperwork together? On a seller possession after closing, there's a 14-day or something like that period. So how does that work? So to answer your question, first, the reason it's 59 days, there's an occupancy affidavit that the buyer will sign at closing that says they'll take primary occupancy of the home within 60 days. In this case, we'll send Bruce because he's the smallest one to check. But after 59 days, William's coming to look and make sure you're in the house, and so you better be there. Not really. Because that 60-day period, they set it at 59 because on day 60, you're supposed to take occupancy. So that's why that number, to answer that question. How that's executed, typically I've seen in my deals where I have people do a lease back. The closing attorney will execute that. The agent will get with the closing attorney, execute some sort of lease agreement. Other consideration I have to talk to the buyer about is make sure that you talk to your insurance agent, make sure the seller talks to the insurance agent, so make sure they're covered in that case. Does that totally answer the question?
So the benefit of that is you could be looking at 90 days to look for a house.
Yes. Yeah. Instead of 21 days, now you're adding 59 days to
Yeah, if you got a 30-day contract, you've got literally 89 days to go bid, find, and you're going,
and 60 of those days are not contingent.
What are you finding for the rent back, or what are people putting down for leasing that back? Just typical $300,000 house.
To be completely transparent, Brandon asked, what are we typically seeing like for the rent back, or what are the terms of that? To be completely transparent, I don't have the data on that because we don't get involved in that piece of it. That ends up being executed kind of outside the mortgage. But in my experience, it ends up being somewhere around, kind of like mortgage plus a touch.
I've seen people go in and offer free,
Yeah, just so that they
just try and get a competitive edge. You know what I'm saying? It's like, my payment's going to be $1,500. I tell you what, let's just give them, free lease back for 59 days. I've seen that, but for the most part, normally they're trying to mirror it up for what payment is.
And that's a great point. I'm glad to say I've got one of these going too, and the buyer is giving the first month for free because when you close on a mortgage, if you close May 15th, you're skipping that June 1st payment because their first payment's not even until July 1st. So the buyer's not trying to make money by executing this lease back. They're trying to get the house. So without even losing any more skin in the game, they can skip some right there from negotiations. But to be totally transparent, I don't have the exact data on what the average lease back price is and whatnot. That answer your question? Yeah, good question.
Nancy Gerald said with your bullet point number 2, presenting the offer, when the LO calls to list the agent, sends text and email, is that only for clients that get a guaranteed pre-approval?
I'll let Jeff answer that since that's his book.
Well, first,
Repeat the question.
yeah. So the question is from Nancy with your bullet point 2. When we're talking about submitting the best offer, when we're calling the listing agent and then texting and then sending them the video text, the presenting the offer when the LO calls the listing agent, sends the text and email, is that only for clients that get a guaranteed pre-approval? No. I'll tell you right now, personally, a lot of it is like feel. You know what I'm saying? If I've got somebody that's just teetering, like literally like 55% debt ratio, it's just like, I have no clue how this thing's held together. No, I'm not going to call and like sell them a bill of goods. But if I'm sitting here and I'm looking at the client, I've looked at W-2s, I've looked at tax returns, I've looked at pay stubs, I've done this for a long time. You bet your tail I'm going to call the seller's agent and let them know, exactly what I feel about this buyer. So, Nancy, I hope that answers your question. So it's definitely buyer specific. So if it's a marginal deal that I know that I feel very confident we're going to close at this point, and as busy as we are, I'm not going to, for me to move forward and jump into it, I know that loan, I'm not going to put my team's time on it if I don't feel like it's going to close. But to answer your question, yeah, I will call the agent regardless, but but I definitely want to see income assets. I want to actually see that we have a viable, workable deal. So ideally, I'd love to be able to offer the guarantee because I feel like that's such a tremendous value add when I'm able to guarantee the work. But if I don't have it, but if I can see income assets, I'll definitely make that call.
Yeah, I think we make the call either way. The guaranteed pre-approval just gives us one more bullet to make on that call and say, hey, and an underwriter has already approved this stuff. Yeah. But there's applications I'd take by the end of that application. Yeah, I'm loaning this guy my own money. Yeah, this is great. Yeah, call anybody and tell them. It's pretty obvious. But if it's been guaranteed, that means it's been viewed by an underwriter and cleared. And, we see your property address, title, and appraisal at that point. So.
Yeah, just try and get us to them early, because a lot of times, it is what it is. It's just nothing other than, I know everybody's busy, but again, it's like they make an offer and then they're just like, hey, I need to get pre-approved. The earlier we can connect with them, the deeper we can go and counsel with them. And again, when you're talking to clients about utilizing equity lines, you can't call us on a Saturday and say, hey, we got this house, we're going to sell our current house. Like, what do we do? Let's get that equity line in play. It just takes time, so definitely the earlier we can connect with them, the better.
Thank you, Jeff. It looks like most of the other questions are ribbon related. To Terry, do you want to take a few of those? However, we do have a follow-up with Ryan Lance from Ribbon, and that's going to be on Wednesday, May 12th at 10 a.m. Anyone who registered for the event is going to be receiving that link so that you can register for that Zoom call on Wednesday, May 12th at 10 a.m.
I'm telling you, we all went through this class with Ryan. He's a fantastic teacher, and the content it's exactly what you need. And I'll attend that class if you can. I mean, it's such good content. He'll walk you through exactly how they work, and we can get rolling on it. But it's those questions we cover in depth next Wednesday at 10.
Terry, do you want to take a couple of those?
Yeah, it looks like the main questions are regarding the valuation on the house. And the good thing with Ribbon is they use certified appraisers for their valuations. Now, they're not going out to the properties to do those. They're doing everything online, but they will work with you on the valuation. So if a valuation comes in and it seems low, they're going to ask you, do you have other comps that we can use that can support a higher value? The other thing they'll do is they'll allow the valuation to increase by 3%. Now, let's say you have a valuation that's 300 and you need it to be a little bit higher. What they'll do is with that 3%, they would allow it to go up to 309. The buyer has to bring the extra funds to the table, to the closing with Ribbon in that situation. So they would have the 2% fee, but they'd also have the additional 3% that way. So that's kind of the main question that usually comes up with Ribbon on the valuations. We're getting those up front. So as soon as you're ready to make an offer with your client, we'll get with the account executive. They'll give us a valuation. They'll usually have that valuation in a matter of 2 to 4 hours. And then from that point, you're able to work with them if you need a little bit more on it. But like the guys said, Brian will be on the call with us next week, and he is super to talk to, and we can go over every scenario with them. There are tons of scenarios that we can use Ribbon in to make your offer a stronger offer.
It looks like we have a question from Jenna Cook.
So
Okay, that one was answered. Yeah.
the lease back with Ribbon, I'm guessing, are you meaning with the seller doing the lease back with Ribbon on that situation, Jenna?
Hey, can you hear me?
I can.
Okay, perfect. Yeah, so can the buyer use Ribbon to purchase the home and then give a lease back to the seller for the seller to stay in there until they find another home?
So my guess is no, but I'm gonna double check with Ryan on that, and I'll shoot you a text today on it. The reason being is when Ribbon purchases the property, the buyer that they are stepping in for is signing a lease agreement with Ribbon to lease the property back. So I don't know that they would allow it for the original seller to lease back in that situation. I'll double check that with you and get back with you on an answer for that. But that's kind of how I see that it would happen. That with the rent, the lease agreement being signed with Ribbon and the new buyer, I don't know that they would allow the lease back that way.
Okay, thank you.
Any more questions from the live studio or in Zoom?
Live studio has pastries. Just so you know, while you're sitting at home in your underwear watching this, we've got pastries in our pants.
I will say we're looking forward to getting back to some live classes as we're getting on the other side of this. But this is something with CC coming on board. I feel like everyone's got incredible talent and knowledge, and it's time. It's time that we all pull this together and start sharing stuff. Start sharing ideas, start sharing strategies on what we're doing to go serve the communities that we're in. So you're going to start seeing us. We've got this Ribbon thing next week. We've got our next one planned in June. We're going to start doing these the first Wednesday of every month. In June, we've got an appraiser that I've worked with for almost 20 years. I think there's so much just confusion and misinformation when it comes to appraisals. John Vestal's probably one of the best appraisers I've ever met, and he's offered to join us and run through that. So we're going to start coming up with these classes and presenting these, and our hope is that you guys, that this helps you. You know what I'm saying? Iron sharpens iron. So this is a way for us to all improve our craft and try and get out here and just be the best versions of ourselves as we're out here competing. So thank you so much for joining us. If you've got any questions, definitely give us a ring, and look forward to hopefully seeing you guys next Wednesday. Thank you so much.